All right. I hope everyone is having a good weekend so far. You've had a good week. I'm really looking forward to doing this update. Some material changes, I believe, this past week. And just a reminder, this is not financial advice. I'm not a financial advisor. These are just educational videos depicting my opinions on the markets. Nobody knows what's going to happen, including myself. I'm just giving my opinion. Do your own research. And with that, let's get into it. First chart I have up is the Bitcoin daily chart. And we have been tracking this one for some time, right? For some time. I've been kind of claiming we've been in an accumulation since early September. I started seeing signs of a Wyckoff accumulation in this macro lower high. Saw a couple scenarios coming out of that, including one without a spring, one with a spring. So far, it's been playing out, right? Not as fast as I projected, and I've been thinking about this move developing. Should this be a Wyckoff? And again, folks, we won't know. We won't know if this is in fact a Wyckoff accumulation type of setup until after the fact, right? So far, it has been playing out like I want to see Wyckoffs play out. All the hallmarks of what you would see on a low time frame. I'm not using volume here because, again, that informs me more on the high time frame. You've seen me use that on the weekly chart to identify our FTX low spring indicated by volume. But this is more low time frame, price pattern, and in the face of, let me remind you what this is in the face of, okay? This is in the face of, since September 11th, what have the markets done? What has the dollar done? Well, up to this point here, okay, this move in Bitcoin, the Nasdaq was down 6% prior to this move right here. Okay, the Nasdaq was down 6%. What has the dollar done? What has yields done in this uptrend? Well, yields have been going parabolic. The dollar has just been on a continual tear. And so the context at which I'm looking at this structure and remain just massively bullish and optimistic is in the face of some historic moves given time frame, right? For the Nasdaq to be down 6% in 3 weeks, 2.5 weeks, that's fairly unprecedented. You don't see that too often. For the dollar to be, ripping 11 straight weeks, and 5-6 of those to be during this this move in Bitcoin, is fairly unprecedented. For yields to just go parabolic, kind of blowing off, and for Bitcoin to be doing this is fairly unprecedented. And that to me is a sign of strength. And getting back to what the fundamentals of a type of an accumulation range is telling us, right? This sign of strength, this SOS region, what is it? What is it? It's marked by, your test, your last point of support, which is all the majority of the pricing, right? In the range, this is the support. That's the last point of support. If you look back in history and in the accumulation range, right? You get a breakout of a, you had a lower high here, right? Here was the high that's established prior. Here was the high that's established higher. So this is a lower high. We broke that, right? That's broken here. So that market structure is broken. And that's why this is called a sign of strength. What's a backup to the last point of support? Well, you get a break and then you get a back up to the last point of support, and you can have multiple LPSs, is this range prior to the price action that preceded what we are in right now. Okay, and so right now, how am I viewing this structure? I'm viewing this structure as the price action is now at the top end of this current range, and it hasn't rejected, folks, and it hasn't rejected meaningfully. Okay, you would expect at a minimum to come back to 27,338. If you're approaching things on low time frames and in simple ranges, you know, that's where you'd be looking for price to go, which is a possibility. It very well could go that way. But what I see is wick, 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 and they're getting closer and closer and closer together. Okay, and you're not making material lows. You're not making material lows, and so this is the type of price action that precedes a breakout. Is this the type of price action that precedes a breakout? Is a breakout guaranteed? No, it's not. But my interpretation continues to remain the same. And you know, where do I look for confirmation of this Wyckoff? Well, a close above 28,131 on a daily time frame kind of confirms that for me. So that's how we're approaching this chart. Let's move along. All right, next we've got my Coinbase weekly chart up. And to give you an idea, let's just put volume up. To give you an idea of utilizing Wyckoff with volume, right, which is also needed to kind of confirm spring events, as well as what precedes expansion. Back in the COVID lows, what do we see? Big volume, right? It's an ugly arrow. I'm sorry, folks. What do we see here? That's a better looking arrow, right? We saw a big volume spike. Spring, big volume. Very good. What happens as you exit accumulation? Volume compresses. Oop. You get volume compression. Hold on. And that, right, is down. And that is down. So, you know, what is the structure right now looking like to me? Let me just get rid of these arrows, and we'll zoom in and we'll examine it. This structure is just telling me it's time. The time is now for a decision in this market, much like back in October of 2020, right? We had been in a very clear downtrend accumulation range, in my opinion, since June of 2019. And towards the end of this accumulation range, as you started to see a sign of strength, right? Which is just a reclaim of all of the price action. What's a sign of strength? A reclaim of all the price action that preceded it, right? With a spring event that fakes the market out. And then a consolidation, you know, right at a critical structure. In this case is this downtrend, right? This clear downtrend. And you just have this consolidation. It's not going lower, right? It's not going lower. And that preceded what was next. And in Wyckoff, what's next? And Bitcoin just loves Wyckoff. It really does. What comes next is expansion, phase E. So let's now move our attention to present day. And we just have so much confluence going on here. So much confluence. How many different points of confluence? This is a downtrend since November of 2021. Okay, how many points of rejection have we had? 1, 2, 3, and so you know, that there's something to this line, right? It's not a magic line. It is acting as resistance. How come we aren't returning back to the bottom end of this, you know, entire channel? That speaks to accumulation accumulation being complete. And in my mind, this was the accumulation, and we have just been sitting on top of this accumulation range. What is accumulation, right? What is accumulation? That is, you know, in simplest terms, when you look at a market as a whole, the supply of the available asset being accumulated by the long-term investors, right? And the day-to-day stuff not informing whether you're going to buy and sell, right? You don't hear something about an ETF being delayed and you sell. You're buying something for the long game, 4+ years. And so all this news that we hear up here doesn't matter to those that accumulated here, which is why the market can't support prices getting back into this range after accumulation is done, folks. Okay, that's the simplest way to think about this. And so that's my contention. And here we are again. I mean, what are some other points of confluence? We're just trying to get out of this cloud, right? The Ichimoku cloud right there, downtrend rejected perfectly to the T, right at the cloud, and it just couldn't be any more clear to me how important this area is. And I still contend that expansion is next, right? The hardest part is trying to time these things. Don't follow me for timing. Follow me for my thoughts on direction. And so I still see our next macro move being the last leg of this bull market. Okay, nothing has changed. This bull market being 5 moves. And everyone thinking, you know, if and when we get to this range here in price, folks beginning to, you'll be hearing things like it's a super cycle, or, you know, that the happening, you just, you know, is going to keep this thing going, and ETFs is just the beginning, and all that stuff. And so I want you to be aware that if in the instance that my theory here plays out, I'm going to be very cautious in this area. Let's put it that way. Next, the macro account, nothing's really changed here. Nothing's changed here. As you can see on the tether chart, you know, it's same story, right? We're right at under this cloud. My expectation again is just is the big move is next, right? When is next? We'll see. We'll see if it's this week. We'll see if it's next week. But that continues to be my expectation. This count is still valid. Still valid. All right, let's move into the Nasdaq. So we had some. Oh, here we go again. It's going to do this again, where it restarts my entire chart, isn't it? We had some good discussions last week on the Nasdaq. We're going to keep those going right now. All right. So what did we talk about last week? We talked about a few things, right? We talked about a few things. Difference in the Nasdaq and the SPY, right? We had some weakness. We had some weakness early on in the week, but we didn't. Let me throw up the 30-week. We didn't breach the previous week's low. Okay. That's the key to me, right? In a risk-off environment, you'd expect the Nasdaq to perform worse than the Dow or SPY. That didn't happen. Okay, that didn't happen. Our previous weekly low was left intact. We reclaimed the 30 during the week, and we closed higher than we did, materially higher than we did the prior week. Okay. And so that to me is just a sign of strength. In a risk-off environment, you'd expect the Nasdaq to perform worse than the other indices. one more thing I do want to say about this is I've been kind of claiming that this correction here closely mimics this corrective structure we saw back in the fall of 2020. That does not mean this is going to be a straight line, right? Get rid of that. Doesn't mean that this is going to be a straight line back, back out of this thing, right? What do I mean by that, right? So if we go back and look at this four bottom as I've got labeled, it came out powerfully, and then you had that was a 1, 2, kind of 3, 4, 5 minor in this major 5 of the macro move. Okay, so we could very well be seeing a throwback, and then this thing starts to move. So don't expect it to be just up and away. We reverse, we reclaim the 30 and it's gone, right? If anything, this was a nasty, great, we're out, and then it almost retraced the entire move. Right, 75% of this move out of the bottom was retraced before it really just got going. So just to kind of set some expectations in terms of if this is in fact the reversal of as I've got it labeled, what could the path look like on the way out? It could look like a lot of different things. I am sure not going to be trying to, I don't trade daily or even weekly, and I wouldn't be trying to tick these moves. All right, let's look at SPY. Hey, that one, this one stayed. Man, I wonder why that does that. I wonder why that does that. Okay, this is the daily chart of SPY. And as I mentioned, here was last week's low, right? Last week's low was right here. We undercut it. We undercut that low this week and then had that incredible reversal on Friday. What do we have going on the on our indicators? Well, we've got a cross pending. We've got we're out of oversold, right? We're above 40 here. And what types of action have we seen in an uptrend, folks? In an uptrend, that's all I care about here. I'm not going to go back and look at downtrends. This is an uptrend. That's not debatable for me, right? This is a series of higher highs, higher lows, higher highs, higher lows, and in a channel that's pointing up. And so what I want to look at here is, what does, since the October lows, when RSI is kind of reclaims this region, this 40 region, right? Once, twice, and I'm talking about reclaim. So you breach it and then you come back up and reclaim, because I want to look at the momentum after the weakness. That's what I'm trying to identify here, the momentum after the weakness. And we've got 1, 2, 3, 4 instances that I'm going to kind of point our eyes to. All right, so number one was October 22nd. Well, that preceded a fairly substantial move out. Okay, now let's look at January of 2023. What did that do? That preceded big move out. And mind you, what happened prior to, right? Prior to, right, we had a lot of just consolidation sideways. What happened prior to this? We had just a lot of, well, consolidation fake outs, right? Spiking up, breaching lows. It's messy. It's messy at these critical junctures. That's why it's not just, hey, once it gets into oversold, that's a great place to acquire. For a long-term investor, I'm of that belief. But for short-term folks that are trying to tick these things, that's not the case. A lot of fake outs. This was 1, 2, 3, 4, 5, 6, 7, 8, 9. It's about 2 weeks of the price action there, a week and a half worth of price action there. Now let's point our eyes to March of 2023, this same area preceded it, right? Nasty correction. This was a beautiful ABC correction. And then reclaim, and what happened next? Out. Man, my chart is now really marked up. Let me clean this up, okay? And then back to August 2023. This summer, same thing, right? We had just some indecision before, but this was a B wave. This was a B wave in our corrective pattern. And so that was midway through the correction. Now, where are we? Now we're in an area where we had the same type of, right, wild price action prior to it, but the key is we got to reclaim at this level, and in my opinion, at the end of the corrective wave. End of the corrective wave. So the next macro move, in my opinion, and all is high probability, is expansion, folks, is expansion. And in the context of, let me get rid of these. In the context of a couple things, before I get rid of these, there is a lot of room to run on these oscillators. That's what we want to see, right? That's what we want to see. Now I'll get rid of these. I'll get rid of these. And if you've studied Elliott wave at all, in terms of the most powerful wave, is this third, right? Is this third, generally speaking. And so we are still in kind of macro 3. And I fully expect this just to be the steepest rally so far to date. Steepest rally so far to date going into the end of the year. All right, what's next? The dollar. Finally, guys and girls. Some type of, some semblance of relief with the dollar. And what do I mean by that? Well, on the weekly, we've got ourselves a beautiful gravestone doji candle. What's a gravestone doji candle? That's what a gravestone doji candle is, right? Exactly like the image above depicts. Does that guarantee we get a reversal here? No, absolutely not. Nothing guaranteed. There's no guarantees in anything. What this tells us is where these gravestone dojis occur. First of all, make them gravestone dojis. Secondarily, the price pattern, right? Where price opens, where it closes, the long upper wick, signifying a lot of rejection, inability for the market to continue momentum in a major way, And when these occur at the end of periods of significant appreciation, they tend to signify the highest probability next move is a reversal, okay? Is a reversal. This also occurred, you know how much a fan I am of the Ichimoku cloud. Took 30 years to develop. Where did this occur? Where did the top of this wick occur? It occurred in 2 places. This trend line that I've got all the way back to the top, I had a possible deviation up to the top of that, and also happened to mark the top of the cloud as well. So finally looking like some relief in the dollar, although with the things that have been going on this weekend, no geopolitical expert, but well, that does not guarantee this thing is just automatically going to go back down. That obviously is, in the frame of importance in life, right? You hear about the things that have gone on this weekend, and it really puts things into perspective and how lucky most of us are. So I'll just say that. All right, next, MicroStrategy. Yeah, let's restart this one too. Let's keep it going with no rhyme or reason. Just make me work harder. I'm okay with that. All right, let's pull up MicroStrategy, and I'm really liking the action here for a number of reasons. Let's go to a weekly chart. Throw this in log. That dollar chart was not in log. And Okay. All right. I'm going to throw up the 30-week as well. Okay. What do we got? What do we got, folks? We got a lot of really important things here. And this is more telling to me than even the Bitcoin chart is. And you've heard me explain why on many occasions, right? I think it's more the margin trading that goes on at key inflection points with Bitcoin includes a lot of leverage, which can skew the overall health and trend of the market at these points. MicroStrategy, remember when I talked about, just because you reclaim the 30-week doesn't mean anything in a downtrend, right? In a downtrend, the trend is the dominant force. And again, reclaim, but the trend was the dominant force. And so those were fake outs, right? Those were fake outs. What do we have here? We had a close under the 30 last week. What happened this week? Look at this candle. Look at that hammer candle kind of at the bottom, right, of this corrective move, and reclaim of the 30-week, broke out of this downtrend. Let me zoom in. Sometimes, folks, I don't know if you guys can see. Please comment too. See things as clearly as I see them, right, when you're on a computer or a phone. So please comment as to, should I be doing more of this, like zooming in at some of these points. But I've got this downtrend. We broke out of the downtrend. We closed above the downtrend, closed above the cloud. So I really do like the reaction at this key inflection point. And this was the key inflection point, right? Much like these were fake outs, this, in my opinion, was a fake out. The dominant trend is up. The dominant trend is up. How do I know that? Well, let's see. Because that's what the trend is showing me, right? That's the trend. And that's the trend. Okay. So in an uptrend, that's the dominant force. And that's the update on MicroStrategy. All right, let's go to next. All right, Nikkei, you guys haven't seen me post this chart, I don't believe, here. Okay. Why is this important? Well, because Bitcoin apparently loves Nikkei. I don't know why. I'm not going to purport to, be able to point to the correlation of the Japanese stock market and Bitcoin's performance. But what I am going to do is point to that correlation since Bitcoin was created. And this is a weekly chart. And this is, Nikkei forming one of the largest cup and handles I've ever seen. I've been tracking this since this area here on Twitter. Claiming a breakout was next, and we've seen that in Nikkei. My target is up here at 38,000, the top end of this range. What has happened in other breakouts within the context of Nikkei in the past? So we've got this flagging structure here, and that's a breakout. Okay. What did Bitcoin do during that breakout? Did a 500x. Okay. What happened during this breakout? Bitcoin did 100x. What happened? You had this wedge pattern, right? Bitcoin broke out, or Nikkei broke out of it. Bitcoin did a 17x. And I claim you got a very bullish structure here, right? This flagging, just a beautiful bull flag, like textbook. It's breaking out of consolidation. I think it resolves itself to the upside. Bitcoin's only done a 1.5x or whatever it is now. I haven't updated this chart in a while, but nothing like what we've seen in the past. And so now when I go to the Bitcoin denominated in the Nikkei chart, this might make a little bit more sense, right? Why do I have this up? Why do I care? Well, because last week, where were we? We were right under this trend line. We were right here, okay? And this week, last week we broke out of it, right? I did my video last week, right before Bitcoin made that move, right? That $1,000 move, broke out of it last week. And now, you know, this is a breakout. That's what this is. That doesn't mean it's going to just keep going up. Could get a retest. But in my mind, the highest probability here is continuation to the upside and outperformance against the Nikkei. What about Bitcoin versus the S&P? Same thing, right? I had this chart up last week, and we were right under this downtrend, and we broke out of it, and now we're, you know, hovering outside of this downtrend that goes back all the way back to 2021. And so my continued bias is that Bitcoin is going to outperform the S&P, much like it did in the fall of 2020 as well. Now let's move to VIX. I don't think I've shared this with you for a while, but this was one I've been tracking since early in the year on Twitter. And the path that I had laid out on Twitter, if you guys want to go search, was this path right here, this V. Okay. And so far that's coming to that's come to fruition, right? You remember when all these VIX calls, we had all these calls for VIX spikes, you know, early in the year. I mean, it's just it's amazing how quickly, when all the cards are stacked on one side of the deck, how quickly things can move to the opposite side. And that's been playing out. I see this channel. I see the next move is down to 10, mid 10s, prior to, you know, some type of spike up into early next year. But so far, this is how I'm reading VIX. Let's go to yields and then gold, and then we'll wrap it up. Yeah, I mean, look, last week I told you I had no idea which way yields are going to go. This week I'm telling you I have no idea which way yields are going to go. I don't have a strong opinion. My bias is to the downside. You know, we've got much higher high, and we've got a lower high in the RSI that's well into overbought territory. What were some of these previous moves in terms of trend angle? 73 degrees, 78 degrees, major moves, right? 62 degrees. Those are major moves in short time frames. Those were followed by corrective moves, right? So corrective moves. And so again, I don't know, could this thing keep going? Sure, but at some point we're going to get some corrective move. My bias is still firmly to the downside, but we'll just kind of keep tracking this and see what happens. Last video, gold. This is the gold monthly chart, and you know, a point in the bear camp, you know, the 30-month was breached this week, but you know, we still haven't made a lower low. Okay. So until this area is breached, this is still, again, just a consolidating type of structure on the high time frame, in my opinion, right? In my opinion. Could it still come down to 1800? Sure. Even if it came down to 1800 and had a reaction, that's still, in the context of this uptrend that gold has been in. Oh, sorry about that. Still in the uptrend that it's been in. Okay, so yeah, so that's kind of how I'm viewing gold. I think this week's going to be very telling again in markets, as you know, we kind of come out of this key inflection point that we've been in the last 2 weeks. I look forward to continue doing these. Hope you all have a great weekend, and yeah, take care.